Good morning, everybody. It is Thursday, January 23rd. Were you ready for the new all-time highs yesterday, or were you still following other gurus that are telling you that the end is coming, the bull market's done, and like Chicken Little, the sky is falling? All that happened, and if you go back to our videos we posted last month, was volatility was going to get repriced. It had been too cheap. The VIX expiration had come on the same day as FOMC, and that's all we had. So we dropped about 4 to 5% in the market, not even enough for a correction to be properly viewed. We would have had to have dropped down to 5,500. And as that risk window was closing into yesterday's VIX expiration, we made new all-time highs. We laid out the business aspects for you. If you're still following other people and their narrative and jumping on and off different strategies, it's time to get focused and level up your game. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So, on today's calendar, we have a few major catalysts we want to pay attention to because the VIX is still elevated. And now that we've made our all time high, we can watch for a retracement uh, in the coming risk windows that will open. Now, next week, we do start earnings season. So, today is really the only wild card. And it's really tonight. It'll be really for tomorrow. The big catalyst today during the day is going to be Trump's speech at 11. We do have unemployment claims coming out in a few minutes. We have tips at 1. That'll be important for the bond market. But the big one laying out on the calendar is the Bank of Japan's rate decision at 11 o'clock. And if you go back to July of last year, so back into the summer when we were making new all-time highs, that was the big catalyst that we wanted to watch, is that would unwind the carry trade. When they changed their rates and made their decision, we saw the market drop into August 5th and into a big volatility event. We are going to be watching that again tonight. Not expecting much out of that at the moment, but we'll do a bigger assessment later on this afternoon and into the evening for where the market's positioned and how that would change. But remember, our line in the sand is our most important aspect. As long as that holds, the market will be dampened in terms of volatility and in terms of moves and favor more upside. So that sits today at 60, 70, and 60, 79. We have a couple of them there. And those are sitting right here, 60, 70, and 76, right at our rotational low for the day. In terms of who's in the market, we have lost our systematic traders today. Yesterday they were buying 40 billion. Now today they need to take a little break. They can't spend that kind of money every day. And that means we don't really have a participant. We don't have them as much of a seller until we get under our line in the sand, or if we get over 61.70, which is our expected high of the day, if things do continue to push higher. So we're taking them out of the picture. And dealers and market makers, the commercial side of the market, is in risk compressing mode. So they are containing the market, keeping it, tighter. And as we come into a catalyst, that's where they want to be because they can dampen that volatility and those moves. Fund managers, we still have cash on the sidelines with about 40% of their portfolios. And our insurance funds are still 80% invested now. So still 20% of their cash is sitting on the sidelines, even after yesterday's big buy. So this will be important to watch because there's still too much money on the sidelines. We need to, from the commercial side of the market, we need to sell more, get everybody full where we have all their money and then drop the market and buy back the product. That's what we're waiting for and we're going to watch for, is that positioning to get stretched. In terms of our levels today and our plan overall, again, our line in the sand is going to be the key. We could see a rotational day, so be looking for a short at 61.30, 61.14. Under 60.97, not as strong because our downside target would be 60.80 for a rotational day. We're looking for a day that's going to balance, probably more between the 60.97 and 30 area. And if we do break out of our rotational and really over yesterday's high, then we're looking for 51 and 61, 69, 70 area. If Trump comes out and says something that takes the market by surprise, anything fiscal policy or outlook, we want to watch our line in the sand. If we breach that and break it, then we're going to look for bigger retracements down to 6,000 or lower. But as long as this holds, the market will favor that upside. And again, that's what drives the market behavior, because this is where the commercials are sitting. And they will change the way they behave in the market if we get underneath that. So this is key for us today. If these videos help you, please like and subscribe. And if there's any other instruments you want to look at, please request them on our X account. We'd be happy to do deep dives into other instruments on these sessions as well. Have a great day and stay safe trading out there.